With less than 40 minutes left in today's session, let's take a look at how the markets are performing. As we can see, markets, despite a sloppy start this morning, off to the races. As we can see, all three, the Dow, S&P and the Nasdaq, in positive territory as investors await earnings from Amazon and Apple after the bell. Well, joining us now is Jack Ablin, Crescent Capital Chief Investment Officer, to break down the market action. So obviously we have the GDP print out this morning. We saw markets tank, but then they rebounded. What do you think is strengthening them right now?
Yeah, I think there's just a growing evidence that if we do end up in recession, it'll be a mild recession. We're seeing a lot of alignment from both the economy, prices, and also the bond market. One of the things I watch is credit spreads, the willingness of lenders to extend credit to lower quality borrowers. And if you look at credit spreads, they're still pretty tight, suggesting that lenders don't believe there are going to be widespread defaults going into any kind of downturn that we have. And the same thing for banks. Banks are not tightening their credit conditions the way I would expect if we thought there was a recession around the corner.
So, Jack, do you think the market's reading this right, or are we just being a little bit too optimistic about the news that we've gotten in the past 24 hours?
Well, the market is pretty optimistic. Certainly the bond market is. And relative to the bond market, the stock market is somewhat skeptical. And so if the bond market's right, I do think we're going to get an equity market rally. The key to the whole thing, though, is inflation. I thought it was going to peak in Q1. It didn't. We've got 9.1, coming now into July. I suspect that inflation will come off the boil. But, I'd like to see a little more evidence to say, OK, now's a better time to get back into the equity market.
Indeed. Been a busy earnings week. 71% of S&P companies have beat earnings. Today's a big one, though. $6.8 trillion in market cap reporting, including Amazon and Apple. Is there any thematic patterns you're noticing over the last couple of days or expectations on those two that report in just a bit?
Yeah, I think that both companies have set up for a notion that consumers are, paring back a little bit. Walmart, Target, those companies have talked about how consumers are really gravitating more toward necessities and shying away from discretionary higher margin purchases. That's leaving those companies, those retailers with a lot of inventory. I suspect we're going to see the same thing from Amazon, certainly, and likely we'll hear something equivalent to that from Apple. And we'll see how many handsets they sell in this kind of environment.
Definitely some market movers to watch there. Big thank you. Jack Ablin there, Crescent Capital. Thank you so much.